Hi there, traders. This is Brad Goodwin with today's trading action. All right, now the US consumer prices, now probably the biggest number in the market outside of a Fed announcement, came in weaker than forecast. 2.4% was the actual number versus the 2.6% year on year inflation number. Now, there's a lot of talk about this number coming out before it came out about it, being a bit mild, but it's all about the projections of what's going to happen going forward. Now, the trading opportunity here was a little bit awkward, right? We had Euro had the best technical setup. It was drifting through 110.80 just before the numbers. We got up to about 111, sort of 10-ish, 10:15 before the numbers. Now, we got really weak numbers in my view. I've seen a CPI number with just zero point 0.1 variance move 100 points. Now, we got a move of about 10 or 15 points and it stalled at 111.30. Now, the price action was a little bit of a concern. It did almost retrace back down to 110.80. The only positive out of that is, technically it was a pretty sound sort of setup, but where we're getting price or momentum and direction from is largely from the equities and the US bonds. Now, the equity markets, like, I don't even see much noise about this. Usually, if the equity markets are down about 4, 5%, it's like crazy. It's mayhem. But the fact is, we have a day where we get 12 to 15% up, 5% down. The market's desensitized to the overall equity moves. That would be a massive risk off day. Now, the issue is as well, on top of that, we've got the US treasuries, right? The prices are up here, yields are down on the 2, 3, and 5 years, but they're up on the US 10, 20, and 30 years. So, like, do you buy dollars here or sell dollars? Okay. And that's a little bit of a confusing conundrum. So, to me, I was looking to potentially get long euro if the equity markets bounced, but they've gone the opposite way and euros bounce, right? So, this is almost coming back to the way the markets used to be in the 90s, where there was a lot of separation between equities, bonds, and the currencies, right? Like the currencies would just generally behave to what the fundamentals were doing. So at the moment, we've had a big we've had a big week. I've got to say that, but it's been a pretty big day. Euro is up 2.29%. I mean, like, what's going on? Some of this stuff just doesn't make a lot of sense because now, like yesterday, I was saying, like, yeah, Euro's going up. Let me just get back onto the charts here. Okay, so we've got that sort of like giant move up here. Now, if I have a look at that and like over the course of 24 hours, these things, would usually stop at 150 points. Now, we've got extreme times. This move here is 24 hours, 330 points, 329 points, right? That is like a major event. Now, the problem I was sort of seeing yesterday, which may come into today, I would expect something out of China coming into the end of the week. Like the Aussie and Kiwi have done a good job picking themselves up off the floor, right? With the pause and the tariffs. But the whole situation is the US is still targeting China. So I can't see why these two instruments would go up that far. Now, they are starting to behave like that because the Aussie was struggling at 62 cents and the Euro's gone up like another 100 points and the Aussie's gone up probably 15 to 20. It's like, okay, so what I'm saying is the Aussie and Kiwi are starting to make a bit more sense. The rest of them, the safe haven trade is still in play. It's back on. Like we're seeing massive flush outs of massive positions because not necessarily the volatility, but the ranges of the moves are exorbitant. And we're seeing we need this to settle down. We need the equity markets. Yeah, they should just go down because of this global growth issue. Like the bond market in the US, this is why Trump paused the tariffs because you know what? The debt that the US government was going to have to pay back was tripled. So they were going to cripple the country just for the tariffs. I don't think so, right? So we need stability in the bonds. And then these 1, 2, 3 will start lining up and will make a lot more sense. Like right now, yeah, this does make sense. Euro, sterling, Aussie, Kiwi going up, the dollar going down on the back of the weaker US CPI numbers. Now, weaker CPI, you'd think, you know what, they're going to have to cut rates. But I tell you what, the equity markets are like they're hiking rates. Okay. And the bond market is a little bit spooked as well. So a bit of a mixed reaction here. Look at the metals, right? They've had a great day, 3% up. Copper's up almost 5%. And then you've got oil, etc., getting hammered, right? So like there's so many tangibles connected to China, the tariffs. It's very hard to understand what's going on. My suggestion is you find an instrument that you feel very comfortable with and you can understand what it's doing, right? The safe havens, yeah, for sure. Now, just if you are trading the safe havens like through Friday, right, you got to expect some sort of news out of Trump or China leading into this. So if you've got positions, tight trailing stops, or you know what, if you see a bit of a move, take some of the cash off the table. My preference is trailing stops because then you can sort of stay in the trade. So if we do get some odd events, then you might see a bigger move on the downside in, say, the safe havens like dollar yen. Like look at like trying to hold a position here in dollar yen from sort of 144 up to 148 and a half, back down to 144. It could very easily be back up there, right? But if you have got, if you get in at the right levels and you got a position, tight trailing stop, give it a chance to run. Other than that, just be aware that I'm expecting more news before the weekend, right? They love to like give the global market things to ponder over the weekend. All right, guys, that's it for me. Interesting times, you know. It's as I was saying last night at the or yesterday for the US CPI number. It's actually a real shame that those CPI numbers came out when they did, because normal market conditions that would have been a cracking opportunity there. All right, guys, have a good one. All the best. Cheerio.